Okay, welcome. Stock market technical analysis. No time to waste. Let's get right into the charts. We're going to start out with the general markets. Then we're going to work our way into some trade ideas. I'm seeing a few interesting things this morning that I want to point out. So let's get right into it. Leave me a thumbs up. And again, technical analysis is the art of, art, science, whatever you want to call it. But basically it's using the momentum indicators and trend lines. Everybody has their own way of doing it. The way that I do it, I teach in my course, and and the link is in the description below, so check that out. And so these concepts that I talk through are all taught through the course, 5-6 hours worth of video training. All right, let's get into it. We're going to start out with triple Qs. Nothing going on with triple Qs right now. If you look at the hourly, or 334, I've noticed is really proving to be resistance, at least for the last couple days. It's right about here, and that was previous support. You can see it's previous support, and we popped it a little bit. Basically, it's acting as resistance right now. They keep kind of whipping it around. The market's pretty whippy and really short. Not a lot of range. So I'm just sitting on the sidelines right now. It is at resistance, so we could get rejected here and start to sell off. If you look at the daily, we have a couple things going on that could happen. Obviously, off the March 2020 lows, we have a trend line right here that we've been walking up. I could see us popping that and running up. This is what I think is going to happen. I think we're going to pop this, run up, and make a new marginal all-time new high. Just slightly above this circled area, so it'll look like it'll be right in here. And when we do that, it's going to back test this trend line. It'll be a divergent high with a right at resistance. That's what I'm thinking is going to happen, and that would be a very objective area to short the triple Qs. So I'm kind of looking for that trade. I don't know if it'll get there, but we got to pop 334 right now. Moving on to the SPY. SPY's been backtesting for the last couple days. You can see off the March 2020 lows. There's your trend line. We held support, and it's basically been, this one's basically been bear wedging, where you're kind of creating this bear wedge like this. And we broke trend. So we have a sell signal. We have a sell signal on SPY, and we have a sell signal on triple Qs. And we've just been backtesting. So nothing's technically changed. We're still below trend line support, which tells me we're likely going to continue lower. And as you can see here, though, this is interesting. We're right near the all-time highs right here. Here's the all-time highs, and we're just there. So I think what they're going to do is just run up. They're going to continue to maybe backtest, maybe just run up, pop it, make a new high, hit the trend line again with a new high, and that high will be a divergent high. So if I mark that out, this is what it'll look like on the momentum indicator. It'll be something like this. We'll run up, make a new high. It'll be negative divergence. And likely that's going to be probably all she wrote, and she's going to, sell off from there. So that's what I'm looking for in SPY and the Qs. IWM small caps, same deal right now. Now, small caps has a ways to go. I don't know if small caps is going to make an all-time high and a new divergent high. So really, we want to watch those large caps, but small caps, here's your trend line off your March 2020 lows. Lots of reactions on this one, and we're just back testing. So might run up, do some more back testing, watch those large caps, but I still think we're likely going to get rejected and work our way down to 205 as next level of support. Okay, sectors. I'm continuing to be laser focused on these sectors, financials and industrials. Because that's what's kind of holding the SPY up. We're not really moving a lot higher. We're just kind of grinding higher because these sectors aren't that large of sectors, but combined they can push the SPY higher. Financials, we're watching this trend line here on the daily chart right there. And you can see we're just barely holding support, but continuing to grind along support for the last week and a half, almost 2 weeks. And so we're waiting for that sell signal or breakdown. It's going to be impulsive likely when it comes. So it'll probably come in a gap down. So we're just looking for that. So I just want to point it out and let everyone know what I'm expecting to see, because when it shows up in the morning, I'm not going to be able to get a video out before it's actionable, and all these trades are actionable. So I want to point them out in advance. On XLF, we have negative divergence. Someone mentioned to me the other day why my trading style is, there's negative divergence and something's moving higher, and I don't act. I just sit there and watch it, and it can continue to go higher, and that's very true. A stock can continue to grind higher, and I'm just on the sidelines as it grinds higher. But the thing is I just look for other trades, right? I don't have to be involved with this stock or this ETF, and I don't have to go long just because it's uptrending. I'd prefer to wait for the next tradable trend, reversal to the downside. And again, I'll look for trades that have been selling off that are reversing to go to the upside. So there's always trades to take. You don't have to take a specific stock. I'm just pointing this out because I think the next tradable trend, big move, right? We're not looking for little 2-3% gains. We're looking for a bigger move. This is going to be to the downside, all right? XLF, you want to buy when it's down here and ride the trend up. And when the trend starts getting extended and you start to show negative divergence, it tells you this trend's about to end or at least about to correct. So looking for that breakdown. XLI, same deal. Today they gapped it up. But again, I think it's likely going to sell off and still just grind around this trend line. We're not really moving impulsively off this trend line. Look at these candles. 1, 2, 3, 4, 5, 6 candles of just grinding along the trend line. Negative divergence is intact, and we are just continuing to to wait for that. One thing about this one, we could pop the all-time highs just a little bit higher and put in negative divergence on the RSI. We don't quite have that yet. So that might happen. So we're just waiting for this one to play out. And then XLV is in this bearish rising wedge, still within the wedge near the top. Negative divergence on the PPO, negative divergence on the RSI on the daily chart, which is a more, that's usually the significant trend or setup that I look for. When you start to see negative divergence on the daily, that tells me that this trend, this big uptrend, is about to at least correct or potentially reverse. And so I'm looking for that. That's I think where the opportunity lies. Yes, up here it's like picking up nickels in front of a steamroller. Is that the way I look at it? Yes, there are likely going to be maybe slightly higher gains, a little bit more gains, but the percentage of gains, I think, risk reward is not favorable, and I believe that there will be more gains to take on a downside move. All right, let's move into some of these ag commodities. A lot of people have asked me what I think about these, and I'll tell you right now. So long term, I'm bullish these ag commodities. If you look at like corn as a chart that just looks extremely bullish to me when I take a step back and look at the bigger picture. This is your bear market going all the way back to 2012, but nice clean downward channel right here and a clear breakout. All right, so there's your breakout. We had bullish divergence down in this area. You can see. Down near the low right here, see that bullish divergence? See how the momentum made a higher high on the RSI and the PPO right there. And yet the price right there, that was a divergent low. See how the price made a slightly new lower low, and yet the momentum was higher. That was a signal that there was likely going to be a trend reversal. And if you bought that divergent low on this daily chart, that's, you've made a screaming, if you've, as a long-term investor, you've made, as of right now, 75%, and at the high, almost doubled your money. But clearly in a bullish trend. All right, we've broken out, we've created a new bull trend. So I'm bullish, all right, longer term. But I think there's going to be pullbacks along the way, and that's what I was looking for in corn. So if I go here, I was looking to buy, I'm looking to buy down here, and I think we're still going to get it. There, we broke this recent trend here. We're trending down, popping today. But I think this is going to roll over and continue to come down. We're going to hit this trend line at some point is what I'm looking for. That's your from my perspective, that's going to be the longer term trend line to buy on. And I'm looking to buy down there. From the high right now on corn, we've already corrected 11%. And at the low, we were down 17%. So, you get down to this trend line, maybe we'll be down about 20% or so. And yeah, that looks like the area that I'm looking to buy. But again, in a bull trend, sometimes you never get the opportunity to buy, the buyers step in early. So something to watch for. Yesterday I actually bought wheat and soybeans. Here's wheat, started to come down yesterday towards this trend line. And this is kind of the longer term bull trend line, but we also have some support right there. Look at the daily. See that? That was former resistance, about 654. Resistance. And then there's your breakout candle. All right, that's what you want to look for. Nice impulsive candle and a breakout. And basically we corrected, came down, made our way down towards this trend line, but we undercut this support. Wasn't a real impulsive breakdown. And this candle right here, that's a doji candle or a reversal candle, and today we're getting more upside. We've recovered that support level, that broken support. It was basically, this looks like a bear trap, just a false breakdown, and we've recovered it with the doji, which is a reversal candlestick, and confirmation. In general, this chart, this commodity looks bullish. So I suspect we go on to make new highs within this pattern right here and continue trending higher. If I roll back to a longer term chart, wheat going back to 2012 was in a bear market. There's your bear market, and this is a big basing pattern, this sideways range right here, and now we're starting to work our way higher, making higher highs and higher lows. All right, so there's your high, there's a higher low, we have a higher low. I think we're looking at a higher high now. So in general, bullish long term, and even on the short term, I bought yesterday, but it looks like it's going higher on that one. Soybeans is a little different. Now, I did buy some yesterday. I took a pretty big position. We did hit this trend line support. So let me roll out. Look at the trend line right here on the daily. You've got the low here. You tag that as support, tagged it again, and we came down and hit it just yesterday perfectly. So I took a pretty good sized position. I was looking for a bounce off of that. We got the bounce today. Now, I don't know if this is going to hold for the next leg higher, or we might potentially break this trend line. The one thing I don't quite like about it is negative divergence on the PPO and the RSI. So this high recently, this was a divergent high, and we have negative divergence. So we'll see what remains. Maybe the buyers just continue to buy this thing up and it burns through the negative divergence. But, I did get that bounce. So I did take some of that off today and locked in just a 1 day profit, but not too bad on that one. So we'll see. I'm not exactly sure on this one. The wheat chart looks extremely bullish. Corn, to me, looks like it could come down a little bit more down to this trend line. And soybeans hit its trend line support. If I roll out to soybeans, you look at the bigger picture, soybeans, it was in a bear market, going back to 2012. Clear breakout, but it's been really impulsive and it's just shot straight up. So I could see us coming down and correcting a little bit more. Maybe we hit the 200-day moving average. Since we broke above the 200, we haven't visited it for, about 9 months or so. So I could see us breaking this trend line, coming in, correcting a good size correction, hitting the 200-day moving average and maybe some other support levels, and then, continuing higher. But longer term, bullish, the ag commodities in general. Coffee looks pretty good still. Coffee still looks like it wants to run up. Resistance right here, about 45.67. That comes from the previous. You can see we held support here. Popped it a little bit there, but it was acted as resistance right there. So we've got a reaction level, 2 reactions on that one. 45.60, 45.60 range. And so we got another $1 or so before we hit major resistance. And yeah, that's what I'm looking for. But I think coffee's looking good. I think it still has a ways to go. And here's sugar cane. The bigger picture on sugar, if I roll out, here's your downtrend line on sugar. It hasn't quite broke that bearish pattern yet from the 2012 downward bear market. So you can see we have a reaction there. There's kind of another one. And we hit it again. So we're getting another reaction. So what I'm waiting for on this one, I'm looking for the breakout of this trend line here. We could come down, hit this support level at about 788, and then bounce and break. So things to watch for. Longer term, these ag commodities all look bullish. All right, let's look at gold and gold miners. I haven't talked about those for a while, so I'm still questioning gold. I think we're going to come in for a little bit of a pullback. When I look at gold bullion, I don't see, there's no negative divergence here on the daily. If I look at the hourly, we don't really have negative divergence there on the hourly either. Maybe slight negative divergence if I get rid of this trend line here, kind of mark it out. Again, maybe a little bit right there. On the PPO, it's a little more clear. So you've got some negative divergence. Gold continues to trend up. The miners look like they are. The miners look like they want to come in just a little bit, not a lot, but just a little bit. So I am looking for that. If I look here on gold, you also have a more major trend line for gold bullion. You can see reaction. Here's your reaction. That's your COVID drop, and then another reaction right there. This was your divergent low right here in gold, and this is where I talked about wanting to start buying gold and gold miners. Was down here. Since then, gold's gone up 13%. The miners have gone up 30% or so to 20 to 30%. Potential to come in and maybe hit this trend line support about 1790 or so. We might come in and test that support before continuing higher. You can see here on like Barrick. So Barrick's the second largest miner behind Newmont. But it's a good gauge, I think, for how the miners are potentially going to perform. Barrick's kind of coming in a little bit, and I'm still looking for Barrick to hit this, 2290, 23, this trend line right here. I don't know where it's going to hit, but I am looking for it to hit that. That's where I'm looking to buy Barrick back again. All right, so I've taken my Barrick, my Wheaton, my Agnico Eagle off the table. For the short term, I'm looking to try to buy this pullback if we can get a little more downside, and that's what I'm. I think we're going to get it. It looks like we're going to get it. So looking for that Agnico Eagle. You can see, I'm really looking for a pullback to this potential area trend line. So it's not a large pullback. And again, longer term, I'm bullish the gold miners. So I am. I still have many mining positions. Just some of these big positions that I have in these more major miners, I just took off for a little bit of, to game a little bit of a pullback. But I think it's going to be a pretty brief pullback, and then we're going to continue higher. Wheaton, you can see, Wheaton's not even pulling back. It's just flagging out. It's just not really dropping. It's just kind of chopping around. I'm hoping to get a pullback down to this trend line right here. Down, and from there, that's a drop of potentially 5% or so, and that's what I'm looking for. But longer term, these all look bullish longer term, so I don't want to confuse anyone with my short term outlook for the medium and longer term outlook, which I think looks pretty bullish. Draftkings, we'll talk about some of these short trades and momentum stocks. Draftkings just testing this resistance for the fourth day in a row. You can see here on your daily chart, there's your resistance trend line held there. Finally broke. And again, we're just testing it. I think they're going to pop it and run up and hit the 200-day moving average and then get rejected there. You can see we basically have tested it 1, 2, 3. We're on the fourth day. And at this point, I think a pop of that trend line will run some stops. And then they'll turn it around and reject it there. That's what I'm thinking is going to happen. It's still an area that I'm interested in being short, whether they pop it a little higher or not. I'm just going to ride that out. But I am looking, I do have a short position. I'm going to sit through, any kind of stop rate that it looks like is going to happen. Negative divergence on the, negative divergence was basically there. It's a big, long negative divergence. We also have a head and shoulders top pattern. I pointed that out. So as far as I can tell, this is going to work its way lower. Whether they pop it just briefly. I still think we're heading down to 35.32. Looks good. Lift, I'm not short this, but I'm looking to reshort it here pretty soon. So you can see we've got the big gap here. That's going to be at my target, which is down around $30. And we have this trend line right there that we held. This was all divergent high. See the negative divergence? So we made new higher highs in prices, but the momentum was less and less, diverging lower. We broke trend, so there's your sell signal right there. Nice clean sell signal, lots of confirming candles, and they're coming in for a back test. So if they pop it all the way up here, and that's a ways to go on this one, I'm not so sure it's going to get up there, another 7 or 8% up there. But if they can get it up there, that's where I'm going to reshort it, is right up there on that back test. And I would look for, and then from that short position, I'd look for it to come all the way down to 43.30, 37, probably hit the 200-day moving average, maybe get a slight reaction there, and then ultimately work its way down to 30. I still like it, but I am looking for this to go a little higher for a good entry. So I'm kind of watching that. SQ's in the same boat as Lift. So here's SQ, nice clean trend line right there. 1, 2, 3, 4 reactions. Broke. We have a sell signal there with a nice breakdown coming in for a back test. So a little higher, and I'll look to reshort this one. Basically, and I've talked about this, it looked like they wanted to do a back test a while ago, and so about 3% up, another 3%, and you usually don't want to wait for that perfect tag of the trend line. You usually want to step in a little bit early, so we don't have too much higher to go, maybe another 2% or so, and I'll start to reshort this thing. Looking for this to get rejected on this trend line. Again, negative divergence was intact. There's your divergent high. There's your break of trend line support and your sell signal, your back test, and then I think we roll over. Ultimately heading down to 134.23. That's a pretty good target level. And even potentially 83, 82. All right, so watching that one for a re-entry on a short position. Is not quite there yet, but very close. And Snap continues to just battle around with this trendline resistance. You can see 1, 2, 3. We're on the 4th day of it just chopping through this a little bit and getting rejected and chopping through. I don't know if they're going to break out, maybe. But again, it's not going to be a breakout unless you see big green candle with volume. That's not what this looks like. It would likely come in the form of a gap up or a pretty impulsive move right out the open. But if that shows up and you get a big impulsive candle and you get some volume coming in, then we could maybe consider that a breakout and look to stop out of this thing. But as of right now, it just chopping around this resistance. I think it's going to get rejected. This is the 4th day in a row, and likely it'll become obvious that this is going to hold as resistance, and then we'll work our way lower, start to downtrend, and come all the way down, hit the 200-day at a minimum, but likely going to, I'm targeting this gap all the way down here at 29.29. So I think we work our way lower, kind of bounce, and then briefly pop it into the gap, we cover, and that would be the trade. Look at Etsy. It just continues to bear flag. All right, we're going on, multiple weeks of just flagging out on this daily chart. They popped it briefly. It's rejected. We're below the 200-day moving average, and it's just not going anywhere. It's going sideways. So I'm still looking for a break, some sort of the next sell signal for a breakdown right here, a nice impulsive breakdown, probably getting below this level. We'll probably just mark the flag out as something like this. Looking for a break of 153.50, we'll call it, an impulsive breakdown of that. If that goes, then likely we're going to sell down to probably the final target, 122.50, right in that area. That would be likely my final target on Etsy. I think that's the way it's going. Peloton's coming into major resistance, so this is really getting close to being an objective short. You could probably even step in right now, in my opinion. You've got a clean downtrend line on the daily chart. Let's tighten this up and make sure this trend line is actually pretty good. Yeah, you can see reaction, reaction, reaction. There's 3 reactions, so that makes it a valid trend line, and you can see we're coming right into it. They might pop it just briefly. The 200-day moving average is right there above it at 114, so they might run up and hit that 200, pop it, and then fail and get rejected. That's very likely. So I would say, about another 3% up, and we start getting very objective to short this thing right in this area. But one thing to know is, we did have bullish divergence here on the on the daily on the PPO, and it's not there on the RSI though. You can see here's the RSI. Let me move that in. See how that's still moving down, still downtrending, making lower lows. The PPO looks a little different right there. So mixed signals. I think it's probably worth taking a shot short right up here if we pop it into the 200. I think that's worth it with a stop just slightly above. Again, you take the short position, and if it starts to impulsively move higher, stop out, take a small loss. But if it works, then we likely could, Peloton has the potential to come all the way down to this area right in here, which is about 3684 over the, and it's not going to happen all at once. It's likely going to take, could take a year, but we might be just continuing to downtrend. All right, so we're coming into key resistance. Watch around that level. I might take a shot at it and then just put a stop slightly above. If they, if there's a breakout, above this level, then we'll just consider that, this downtrend finished, and just, might even flip long. We'll see. And MGM here, we're continuing to watch this one for a break of this trend line. So on the daily, here's your trend line that I'm watching right there. We have several reactions on it, validating that trend line. We have clear negative divergence on the RSI and the PPO. So we have, that today where it looks like, we made, we're kind of diverging. It's another divergent high just right in this area, slightly new high. So just continuing that negative divergence, and that can continue for a while. We don't know how long that's going to continue, but usually the way it works is it'll diverge just a little bit, kind of grind higher, and then it breaks impulsively and wipes out all the gains. So I think when it breaks, you're likely going to wipe out all this area pretty impulsively. So that might come on a gap down, something like that. And I believe when you see that, we'll trade straight down to the 200-day moving average, about 31.80. You've got some support right here at 31.72. The 200 days right there too. So that is a potential setup, not an actionable trade yet. And if it breaks, depending on when we break, but it could be about a 15% to 20% trade. It just depends on where we gap down to and if we gap down. So things to watch. Nothing's actionable yet. And that's what I'm seeing across the board. It's just more of the same today. There's all these setups, lots of good trade setups, and most of them are shorts, but they're just not actionable yet. And that's how it works. Things grind day in, day out. You're not really going anywhere, but you're not breaking down, and then it breaks. The dam breaks all at once, and you got to move quick when you see that. And so that's why I want everything. That's why I'm pointing out all these trade setups, so that when that shows up, you can jump on that. And that's the thing, if this was going to sell down to this trend line right here, if you were long MGM, you're just going nowhere, and this is going all the way back to February or so. We could wipe out in 1 to 2 days, months worth of sideways kind of grinding higher action. So there's no real profit being made. If you're long this MGM stock, yeah, you're in a bull trend. If you bought it down here, sure, you made profit. If you're buying it up here, you're not really making any more profit, or, it's just grinding sideways. So it can just grind higher, kind of keeps you in the trade because it continues to encourage you with slightly new gains, and it's not really dropping, so no reason to exit. And then all of a sudden, boom, it just drops and wipes out all the gains very quickly. So that's why it's important to be on point with the charts and the technical analysis. Leave me a thumbs up, guys, on your way out. I do appreciate that, and I will catch you guys on the next one.